Hello, good evening, everyone. Welcome to another ChartNexus Traders Club. Right, today is the 26th of May. Right, market is just closed, so let's take a look at what are the trading opportunities, right, that present itself. Okay, so before we start, of course, let's take a look at STI. Right, so STI has been supported by the triple support that we talk about. So now it's hanging by the 20 and 50 MA support, which is not really giving much. Okay, so ultimately we are relying only on this gap support. Yeah, so you can see this gap that we had established since April, right? So it's more than a month already. So this gap has been tested repeatedly, and it was tested again. Yeah, so last week. So as you can see, this is where the gap support, right? Previously was a gap up, and it becomes a subsequent gap support. So this is still holding. So I think that is the last line of defense. If this breaks, right, so we may see more downside back to the lowest point since the COVID. All right. Okay. So yeah. So we got to see what happens in the upcoming days. Very crucially, right around this level. If there's any rebound, right, from this support, then of course we'll be looking closely at this 2669 level, which was a previous high. Yeah, that was I think that was the last high after the rebound from the COVID low. Okay, but if you have to go higher, then of course we got to contend with those gaps at the top, right? So we have some significant gaps that was created back then in March and late February. Okay, so this is yeah, recovery is painful as always after a downtrend, but we'll talk about it as we approaches them. Yeah. So today basically there are some opportunities. In fact, there are quite a few, but we will try to focus. Right. So I'll mention basically how to zoom in and filter away, yeah, those stocks that probably may not be as attractive a trade, even though the screener may screen it up. All right, so let's yeah, so I'll just take a look at the screener so you can see the results. Yeah, so this is the ESP master screener. So now we'll move to the web base. Yeah, so for those who have not used it yet, you can just go to espmaster.chartnexus.com. Yeah, basically you just put in your same login ID and password, right, as the same as the ChartNexus standalone software. Yeah, so the screener automatically screens out the stocks. Yeah, so basically I've set in only those trend trading rules. Yeah, so you can see it's only the uptrend, CNX up. Yeah, these are the up trend following rule. Yeah, then we have the CNX down. Yeah, the downtrend trend following rules. All right, so I've taken away those that are filter away those that are breakout or counter trend, which is less likely to be of a successful trade. Okay, now first up, I think the electronics and the manufacturing stocks, AEM, Hi-P, right? All these have been in focus. They have been the leading sectors, the only shining light, right? Shining beacon in this COVID crisis for SGX. So if I just pull up as CNX up, so you can see this has been something that we talk about. The trend is strong, but we couldn't just buy it because we needed to at least pull back to some form of support level, at least near the 20 or 50 MA. Yeah, if not, if you're to buy at all this level, it probably could be too high a risk. Yeah, I prefer to wait for it near to a support. So AEM, even though it has triggered a technical signal, right, that there is a potential rebound, but it is too far away from the horizontal and the 20 and 50 MA support level. Yeah, the red line, the blue line. So if it's too far from support, basically you're buying too far from the support level, which means you could be nearer to resistance level, isn't it? Yeah, so that's where AEM may not be a good buy. I'm not saying it will not go up, but just that your risk in taking this trade may be higher than like. Yeah. Okay, if I may, I'll just pull them up so you can look at it side by side. Franken as well. So if you look at Franken, okay, so you see Franken, yeah, So this is the entry. Okay, so for Franken, right, it's also not too near to the, it's quite near, but it's not, it didn't come to the support level. So it didn't come to the 20 and 50 MA. So that's where it, I'll skip it as well. Okay, but for Hi-P, yeah, so this is where, okay, let me remove the, I think, let me zoom it in. So you see for Hi-P, the last session, last week, right, basically, that's where we talk about, right, where to wait for the support level. So basically, if you can see last week, right, the last trading day, you see it did come down to the support level. Yeah, so it came down to the 20 and 50 MA support zone. Yeah, so this is where now it has formed a MACD signal. So basically, you're looking at it as a potential entry. Okay, so if you look at the few stocks like Franken, UMS, AEM, yeah, so compared to Hi-P at least is bouncing off from the support. Okay. Now the only thing is the stop loss, right? It's about 9%. Okay. And if you look at the profits, yeah, doesn't look too great, isn't it? Okay, but of course, as I always mentioned, if it's a trend following rule, yeah, and this is the leading sector. So probably if you want to take some risk in it, there could be a good chance it could go further from here. Yeah, so this is the risk that we will be looking at. If you want to take this trade, it's at least a better entry level. Yeah, but please wait for the blue line, which is $1.13. That is the E. E is basically the entry price. So if you want to take this trade, wait for tomorrow if it hits the entry. Okay. Upside, of course, those are the recent high. Okay, so it has to break through, so there's the risk you're taking. But the one that is the most certain risk will be this, the 9.73%. That's where your cut loss will be. Yeah, so that's the risk that you have to ask yourself, are you prepared to take? Upside, there could be unlimited potential, but we keep our downside to just this stop loss of 9%, which is around $1.02. Yeah, that will be your exit. So take in the trade at 113 if it hits, and then get out if it comes to 102. Yeah, so that could be your plan for this Hi-P. All right. Now, if I show you the other one, which is UMS, yeah, so yeah, UMS also have the signal, right, for CNX up. Okay, but again, you see it didn't really pull back down to the support level. Yeah, so not even near to the 20 MA. So that's where I'll prefer to look at Hi-P in terms of where the trade bounces off. Okay, again, I'm not saying stocks like UMS or AEM will not go up, but just that they are not as near to a support level as I would like to have. Okay, compared to Valuetronics, yeah, so besides Hi-P, the other one you can look at will be Valuetronics. You see that it pulls back for about 2 weeks, and then it comes back to the 20 and 50 MA support. See that? Yeah, so this is the one that is similar to Hi-P in terms of where the price is bouncing off. It's bouncing off from the support level, namely the 20 and 50 MA support. Okay, so again, look at the entry price, 0.67.5, then your cut loss will be 61.5 cents. So that will be your 8% cut loss. All right. Then of course, the risk and reward, the initial reward of the recent high is only 6%. So this is a risk that you will be facing, yeah, of the a small profit compared to the loss. Okay, so if you don't want to risk it, then you have to skip this trade, because the risk and reward is not as attractive. All right. But if it's an uptrending stock, then we would like it to have the uptrend continuing. Then you just need to keep your upside down of 8%. Keep it down, keep it there, and then any upside potential, the sky is the limit. Yeah, that's how you continue to be positive in your trades, yeah, overall trading. Okay, so very quickly, the electronic and manufacturing stocks, they are the leading sector in SGX. Yeah, so focus on Hi-P and Valuetronics. Yeah, they, in fact, AEM, all of them, AEM, UMS, Franken, they all are showing signals. Yeah, but you can't be possibly taking them all. Yeah, so I will focus on Valuetronics or Hi-P or both. Yeah, but the key thing, wait for the entry price to be hit first. Okay, so for Valuetronics, wait for at least 67 and 67.5 cents, and for Hi-P, yeah, wait for at least 113. Yeah, that's the entry price. Okay, and of course this cut loss if it doesn't work out. All right. Okay, so those are the stocks, right, for technology. Okay, look at SGX, right? This is the one that we have been talking and watching and waiting for. So those who are in already, yeah, you're in the trade. For those who are not, as I mentioned, that's where it's presenting entry opportunity again. So it has triggered the uptrend rule. Yeah, so you can see the entry price is about $10.05. Yeah, entry price is $10.05. So if it goes up for SGX, those who didn't take the trade, you could take them. Those who already entered previously, right, this is where you can look to add position if you want to. Okay, the cut loss is $9.63. So that's only about 4% risk, and more importantly, the initial profit will be, based on the recent high, will be about 5%. So you definitely at least a 1-to-1. Yeah. So and then let's see how far we may go on from there. All right. So that is SGX with a trend following opportunity. Yeah. So right. So there's SGX continue to be staying up. Okay, now one thing that didn't screens out, but I think it didn't screen out for a reason, but you can put it in your watch list because it's one of the better individual stock, right? Sheng Siong, right? So like we say, it'll be good that it pulls back down to the 20 or 50 MA, right? Support level. Okay, so but looks like it has not. So some may be looking at it as range bound, which is quite true. I think for 2 weeks already, yeah, it has been trading and stuck in this zone, small range, right? But still a range nevertheless. So it's never able to break 160. Yeah, so if you are feeling aggressive and bullish, right, on Sheng Siong, and you would like to take it, please take it only if it's able to break 160. Yeah, so it'll be good that there's a high volume day on 160. That will be a breakout trade. Okay, this stock is a historical high, by the way. So historical high means it could potentially go higher first. Yeah, so you are aggressive, you venture into breakout trade, then this is one to look at. Okay, but if not, then just stick to it. Wait for the pullback. Yeah, wait for the pullback to the 20 and 50 MA. And they will always have a pullback sooner or later. Okay, but if you don't take risk, then wait for a breakout of 160. Yeah, then you look out for a high volume breakout day. Okay, because there will be a range start. Okay, now let's take a look at the other opportunities. And now if you look at say Ascendus REIT, yeah, so Ascendus REIT has a uptrend triggered as well. So if I click on Ascendus REIT, yeah, so it did bounce off nicely from the 20 and 50 MA, if you can see. Yeah, so the 20 and 50 MA support, they're supporting very well. Signs of uptrend continuing. So it's basically waiting for the entry price of $3.07. Okay. However, the thing that makes this trade not as viable is because of this gap resistance. Yeah. So it was a previous gap down in mid of March. If you extend it, gap resistance, we are basically now trading at the door, right, or at the gate of this resistance. So basically, if it hits 307 and that's your entry and you take the trade, you're basically entering into the gap resistance zone, okay, which means that expecting some sellers there. Yeah, so of course, not saying that the price will not be able to break past, but just that you are buying nearer to a significant resistance. Yeah, so you're taking chances. Yeah, that's where be mindful of that. Yeah, so even though Ascendus REIT seems to be a good trade, okay, but because of the nearby gap resistance, so I will rather not risk it. All right. Yeah, very similar to this. If I look at Capcorp, yeah, so we can see the oil price rebounding. So Capcorp is doing a bit of uptrend reversal as well. Okay. Now the good thing is that it has come to a support. It's forming a signal at the support. And you can see the entry is 603. Yeah, so you have, if you can clear this recent high, there's some good potential upsides. Yeah, but again, we are in this situation whereby due to this gap, right, formed in early March, and you can see this gap Okay, you can see the gap has been closed somewhat, but it has not been fully closed yet. So in fact, if you look at it, right, you still have a few cents, right? So you're basically near to that gap. Okay, so if this is just a recent high, I mean, you can take the trade and then it may pierce through. But because this is a gap resistant, I will be paying more attention to it. Yeah, this gap resistance was previously this size, isn't it? Yeah, and then it was able to close, but not completely. So there's this gap resistant risk. And besides that, as it goes further, there's also another upside risk, which is another gap resistance over here. All right, so these are things that may make me want to look away, at least for now, for Capcom. Okay, even though it has a very similar trading level like Hi-P and Valuetronics, yeah, both finding support at 20 and 50 MA and both showing signs of a reversal, right? A signal for reversal. Okay, we'll take note of that. Okay, so if you look at Mapletree, right? So Mapletree Logistics, yeah. So it has also, can you see it bounced off from the 20 and 50 MA support. For those who have watched it last week, yeah, you could have seen the signal last week, and in fact today would be already your trade to take. Yeah, but for those who miss it, you can still take it if it comes to around $1.91. All right, so that will be your entry price, and look out for your cut loss here at around 179. All right. Okay, so that's Mapletree Logistics before it goes back to test its historical now. Okay, one more with Olam. Okay, so Olam. Okay, same thing. You see, it has come down to the 20 and 50 MA. The price has pulled back, testing it as a support. All right, so the entry is 152. The stop loss is 145. So your stop loss is relatively small, less than 5%. Right. Of course, if you look at your recent high, it's not big. It's less than the original risk. Okay, but as again, this trend following rule is where there's a potential of 11% upside. Okay, but I think Olam probably you could be maybe giving a pass as well, because there's this small gap here. All right, unlike CapErTrader, there was a big gap closing to become a small gap. Olam has always this gap, but it's a small one. Okay, so yes. It's about 1 cent to close. Okay, so I think it's still a risk. I think probably better not take this trade. All right, so I think you can focus on Valuetronics, focus on Hi-P, right, and of course Mapletree Logistics and SGX. Yeah, so these are the 4 stocks that you could be focusing on. Okay, for shorting, there's one viable one, which is SETS. Yeah, so you can see SETS has been on a downtrend, 20 MA below the 50 MA for the longest time. So now it has presented itself with a shorting signal. Yeah, so you can see it's the opposite, right? The trend is down, the price resisted by the 20 and 50 MA. Right, just now SGX we are looking at as supported by the 20 and 50 MA. Yeah, so you can see the inverse analysis. Yeah, because this is shorting. Okay, so the entry is 285. Okay, your initial cut loss is about 9.5%, right? Then your profit target around here, which is close to 9 as well, so 8% to 10 in between that, because this is a tight range. Yeah, so near to 1-to-1. Of course, if you want to short this, you will hope that you break out further. Yeah, so this is a triangle pattern as well. So this just to take note, right? Triangle pattern as in the high. Yeah, the high are getting lower and lower each time. So this is where a descending triangle formation. So this is what we look at as a chart formation for continuation of the downtrend. Yeah, so there'll be if it's able to come down and then it continues to break this, then there'll be more potential downside for sets. Yeah, so this could be a good place to look at for the shorting, and then if it comes down and we can clear, then you have a potentially more downside. All right. Okay, so these are the opportunities as analyzed Yeah, so like the rest, I think it's not like Jaffa, yeah, although they have good trading levels, but trading signal, but the levels are too far from the 20 MA support, and you see your stop loss is 10%, whereas your profit is only about 5. So that's where some on this list are skipped, right? Because no point you take a look at them, right? Focus on those that are more viable. Okay, so I repeat, those stocks that you can look out for: Hi-P, Valuetronics. I'll just show you again. Hi-P, right? Hi-P, Valuetronics. All right. So all share similar characteristics. 20 BTMA support. SGX. All right. SGX. XPertTrader, some of you could be in already, yeah, if you have taken based on the signals that we've talked about for years and years, yeah, you could be in today. And for those who want to look at shorting, yeah, so this is sets, yeah, to look at the descending triangle. But before that, you could be shorting from here already. I'll just pull up the ESP master, zoom in, I'll erase, yeah, so this is your shorting. Wait for the entry, 284. Cut loss, 311, shorting. All right. Okay, so yeah, so these are the trading opportunities. Be mindful of your entries and your cut loss, right? So give this video a like if you enjoy what you have learned, and share with your friends, right? So that more will be able to appreciate the art of technical analysis. Yeah, so my name is Gerald. So thank you for watching ChartNexus Traders Club video. Right. Good night.